Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, last week was very volatile after the dollar index, which measures the greenback strength against a basket of 6 major currencies, plummeted to the lows around 101.80. After new data showed that US inflation continued to moderate in December, adding evidence that our worst bout of rising price in 4 decades has passed. After the US Federal Reserve appears to be on track to reduce the size of interest rates increases to a 1/4 percentage point at its next meeting in February 1. The Consumer Price Index, which measures the rate of exchange in the price of various goods and services in the United States, also a key to measuring inflation. According to the Labour Department report, the CPI grew by 6.5% on an annual basis. And that is the 6th straight month following a mid-peak around 2022. While the report was encouraging, it was the smallest rise since October 2021 and followed a 7.1 advance in November. And along with that, with a peak that was seen in June at 9.1. So as I mentioned, with expectations that we could see a lower interest rate hike at the Fed's meeting in February 1, therefore the dollar has remained somewhat heavy. But the downside objective was around 101 figure 15, which is close to where we are now. Looking at the Australian dollar, well, since the break above 69.45, still adds to further gains. And then from the technical point, with the ADX also trending, could see a rise up towards the region of 60 to 71 cents, with the immediate target seen around 70 cents. Any pullback anticipates the support around 69.25, with a base seen around 68.80. The euro still maintains its somewhat bullish assessment, with the dollar falling. It is now getting closer to its objective, which is at 109.45 to 60. From there, we could see a little bit of profit taking emerge as we are overbought, and the MACD is struggling a little bit around these levels. Any pullback would see support around 107.95, and the base now coming in around 107.45. The outlook for dollar yen continues to head lower since the break last week at 130.5. The call is towards 126.65 at 75, which isn't too far away. I do feel that we may see some profit taking from that region, and with the downtrend now still holding around roughly around 130 figure 15. The pound also edged higher, moving closer to its objective, which is around 123 to 124. I would be a little bit cautious as we head towards this region, because if the dollar is getting close to the base, we may see a small bounce, and therefore could see some profit taking coming across the board, that is. And sterling, for instance, backing away from that 123.5, 124 area. The gold has continued to push higher since the current break to the upside under this channel that now looks towards the region somewhere, I feel, at 1,929.31. Reassess from there, because we are getting overbought. And also the ADX is extremely overheating, so no doubt we could see a pullback with the key level seen roughly around 1,875 to 77. Wrapping up with oil, the market's still very much on track to take the challenge to $81 a barrel. We are a little bit overbought, but the ADX is still trending. But I feel like previously that we saw back in late December some profit taking coming through, and therefore may see the market trimming some of their gains due to the indicators that still, at this point, I feel that may actually contain that topside challenge. Well, that wraps it for the morning. Thank you very much for joining me, and as always, look after the intraday port. I hope you enjoyed the great start to the day.